Hello, everybody, and welcome to the Plus Three Futures and Commodities Show. This is our first show in 2025. We are recording here on January 3rd, 2025, about 2 hours before the close. My name is Ben Maldonado. As always, I'm here with my partner, Barrie Hederachi. Happy New Year, Barrie.
Happy New Year.
That's great. Today's show, we got a really interesting show today because we're going to do the normal review of the major markets, and then we're going to take a big picture view and look at the monthlies of everything that we cover. So
Hmm.
it's a really cool show because when you step back and look at those monthlies, it gives you the perspective that we sometimes miss when we're just looking at dailies or 30 minutes or the shorter term time
Hmm.
frames. So
And this is a great time to do that. Look at the
abs
monthly.
absolutely. So let's start with the S&P 500, the cash index. I see you got up there.
Hmm.
Where are we and where are we going?
Well, last week, just to catch up, we left off with a couple. We had two data points. We had 60-20, and then we had 58-48 being the
Hmm.
support area. And well, we talked about that being support, and our idea was to see if we can get above 60-20, or if we can get below 58-48 after we did this lower high, the counter trend, right? Counter trend
Hmm.
high. So, we obviously sold off, even with a couple of days off. The days we did have time to trade, we did come down and down into 58-48, and sure enough, it held and made a little bit of a higher low. So,
Hmm.
so now the mystery sort of continues because we're back in the same mix. And I talked about this block being, we've spent a lot of time in this block. If you look at it back in, um, we started back in November,
Hmm.
popped into this, and we spent probably 90% of the time in here. So whatever is going to happen, we'll have to track it in the cash market. We'll have to watch it here. But let's look at all of them, and then we'll kind of see what we're seeing. So for
Hmm.
now, what we do have, we had a lot of, we did a lot of talk about the high that came in, and we were looking for a counter trend. We got that come into place, and then of course we got a higher low, which we have a lower high, higher low. Well, that's setting up to be some kind of a triangle potentially, because we need at least four of those points to conclude that, right? So we,
Hmm.
we have that happening. We didn't get a false break here, which is surprising, which would tell us, we would have a kind of a strong move up, and we didn't have a false break, but we're just sort of reacting, off of this support level. And the really key we talked about last week was I can't remember exactly what I said, but getting stuck below this would be like the big sign, right? That would be like
Yeah, big tell. Yep.
yeah, that would be a red flag for sure. But up until now, everything's worked out the way we were sort of mapping it out. We got we basically stopped in the zone, really couldn't hold above, flipped over, and all of those things happened. Looking at the other thing, I think the other interesting thing is the Dow futures also stopped at the correct place as far as price goes. Even though I had the zone marked out months and months ago, it popped above it, but right into the 50% line, sold off, and it was kind of leading the weakness coming into sort of the big drops and the FOMC and all of that. So what happened here was we talked about this 216-degree level. It's running a square of 72. We made, we came into support right around 42,552, and it held, the first time around. And second time around, if you notice, guess who didn't make a higher low? So the
Yeah.
Dow went a little bit weaker,
Hmm.
right?
Hmm.
And so I would say, the way we define the downtrend, we have lower lows and lower highs. So as far as that way of describing it, the trend is down.
Yes.
And the big resistance zone is still the same. You can see how we went right up to the 43 723 area, the beginning of the zone. And the end of that, where the resistance gets stronger, if you were to think of it like fading, right? Fading into the strength. of the resistance is 44,300. So we barely got to the first level and we reversed, made a low. And of course, now so far we're doing of course, we're recording in the middle of the day, got a couple more hours to go. So far we have inside bar, and that sets us up nicely for for next week. Should be a busy week for us.
Mm-hmm. Mm-hmm.
Let's see how that works out. Now, I did draw out this potential expanding triangle, which could be in the works. That usually gets everybody. So it's good to be aware of what's happening in the background. And speaking of which, here's the same sort of pattern working out in the March contract. Is the ES March contract.
Mm-hmm.
So just keeping those in mind. Now, if we shift back to the square, we squared out. Everything's working okay. It's just a matter of sort of isolating the next leg after all the little moves the market will try to do. So we got the higher low, and as far as I'm concerned, everything is okay. We just have to see if we can exceed this low, or we can take out the low from yesterday. That's kind of where we are. So we're kind of midstream. I think that's a good way to say it, because we're not
Mm-hmm.
in a corner. We got the first corner, we got the low. And as you guys saw, the low came in on, if you look at the cash, we got low came in on the right place. This 58.48. So
And
that
it
part's
came in
okay.
on the 90 on that March contract chart too.
The
It basically on the March contract, it basically found support on the 90.
Yeah, it went into the 7/8 of the
Mm-hmm.
prior square, but yeah, it's around there. And we're trying to hold above it, right? So we'll see.
Mm-hmm.
We'll see what happens. But so far, I'm kind of going with the swings. We got the high, we got the first drop, we got the counter trend. All right, now we're between the first low that we got and the counter trend high. So we're working that. As long as we're working that, we have to really be careful and pick and choose our corners, because we don't want to get into potentially what could set up to be a bunch of chop.
Mm,
So,
true.
now the point is really to focus on this swing and see how it sets up. Couple of other things to notice. This is an old cash chart. We've looked at this every now and then. Oh yeah, we looked at it when this whole circle thing was happening,
Mm-hmm.
which we can actually delete now because we went way beyond that. But what really works are these equilibrium lines, and we came back down to that line. We touched it back in September. We touched it here now in December. So when that happens, normally what you want to do is to see if we're going to stall out on the next high. It'll come up and is it from below sort of thing,
Mm-hmm.
and or not. We want to see, is it going to slice through to the upside or stall out here. If it does, that's around 59.92. Let's say 86 to, if you take a few days, to
I was gonna
6,000.
say it's rising each day a little bit, so
Yeah, so it starts about 80 to 20 points starting, add 20 points to the 80. So it gets up right up into 6,000 next
mm-hmm.
week. So that area is resistance, and you can see if you really take into account, that's well below the first counter trend high, which was 60.50. That's 50%, 50 points less than that. So that's the potential point I'm watching just to see how this works out, because the trend is still up, right? As far as this is concerned, we
Mm-hmm.
held the low here, but we did drop a couple of levels down. So something's definitely happening. We'll see what
And
happens.
something different than what was happening on the way up when it was capturing levels.
Exactly, exactly. So, I mean, if this is really going, we should have held the XB line, right?
The
And
center line, that's
yeah,
right.
center line, and then structure something out of that.
Mm-hmm.
Okay, what else? This is the continuation chart. Again, we squared out right at the right around the FOMC. Counter trend high was at the 50%. Why am I talking about this? Well, because the setup and analysis seems to be on track. So we just want to make sure, you know, every step is we're following the sort of the charts. And here the lows that have come in, they're coming in on structural support, which makes sense.
Mm-hmm.
And well, here's another way of looking at the continuation chart. We had 6,100 is exactly where we came up and topped on the counter trend move, which we talked about last week. We talked about this 58.92 last week, and you can see where, that's kind of where we stalled. So really what has to happen between these two levels on the continuation chart.
Mm-hmm.
And if you guys want to really follow this day to day, then follow us on X, because we post, Ben post around the clock, right, Ben? And you cover everything, right? Not just
I,
the mini
yeah, whatever's
or
active, I'll try
yeah,
and
you
post
cover you cover all the active things, and I basically cover the S&P and a little bit of NASDAQ. So
with expert detail, I might add. Don't be so modest.
yeah, there's some detail. Yes.
You're not just covering it. You put a lot of really good stuff out there.
Because it's just one thing, it's easier. You know what I
Mm.
mean? Um, for me. Anyway, that's what we have. Let's take a look at the weekly, like we always do. See what's happening.
Boy, that
Right.
weekly is just a good chart, man. Look at
This
that.
is solid, solid
Hmm.
chart. I'm just curious to see how it all plays out, because as far as
It's so far so good, right? The way it what it
hmm
was telling us at that high, it was that was a very significant high. Let's see what happens. And we got the
hmm
first pullback, and now we see what's going to happen next.
exactly. I mean, every day is not a new swing, so we have to live through these corrections and all the different things the market will do.
I mean, what's it telling you right now?
Well, I think the high looks very good. You saw how support held, so which is normal. Support can hold and market can get a little bounce off of it. So long as the high is in, the high is in. There's no arguing that.
Right?
And as far as the weekly goes, now, weekly monthlies are the slowest to turn. So by the time the weekly get confirmation, obviously you would have had all of that, let's say on a 4 hour, you know what I mean? Because
Yeah.
higher, lower time frames will turn quicker. So far as the weekly goes, this 225 is really the level, it's 57.97. If we can, once we penetrate that, of course, that's far from the high, so you can't really use it for trading, but it can be used for other things. Yeah, so basis the weekly, we're watching this 225. So what's the big deal? I mean, the way I would take that is, once, if and when this gets taken out and we get stuck below that, my inclination would be that it's going to be a much deeper correction,
Hmm.
you know, sort of like what happened here, back in 21, 22. Again, we squared out on a half. You can see right there, it was a
Hmm.
90.
Hmm.
And once we took out the 135, it was 43.45. First we kind of peaked, rallied, came back down. Once we took it out here, we had an entire square move to the downside,
Sure.
which lasted damn near a year. So,
Yeah.
so
Yeah.
that's the idea. When the weekly is slow to turn, but once it turns, the steps can be giant. It could last all year.
Yeah.
So that's why we want to watch that to see where everything's, how everything's setting up. And this one, same thing happened. We called out the high, we got the false break, and everything worked like clockwork there. And we got the low here. So let's see what happens. I mean, obviously the high is in place. Everything looks good so far. But as you can see, what happened back in 22, it's not that simple. The market doesn't just drop it like in 2020 or some of these other times when it
Hmm.
drops. So you want to watch all the moves to see how it sets up. So that's a weekly. So
Hmm.
here's the 30-minute, and it's running still live. God, I'm gonna get these numbers out of the way now. Hold on.
Hmm.
So this week, well, I took out the holiday times and everything, and it was a little bit ratty, but nonetheless, 59.87 held. Once we got through 59.42, got back down to this 58.69 level. That's where it held. Came back up to 59.42, sort of checked it. We spent a lot of time hanging right below it, and then we on the 3rd we got on top of it, and now we're in full blown move up. And this 59.87 to about 6,000 is the resistance band. So that's, I mean, ideally we should stall out here at some point. At the max, we would have to go 3/8. That would be 60.10. That's for today. So we'll see how that works out. And getting up into this, anything much above that will set us up for a potential false break, because we have two highs here, and that could give us a false break going into next week. We'll see how it works out.
Mm-hmm.
But for now, we had the morning, so the rattle over here, but then once we left 59.42, it was we started moving higher. So not much to talk about this week. It was only a few days of trading, really worth mentioning. So, but although we got plenty of action, right?
Yeah,
For the
in
start
a
of the year.
compacted area.
Yeah. I mean, huge range. And so that's it. We'll watch next week. This is 30 minutes, so you guys can get on X and check these out. The key number we were working off of was 59.42, with market being stronger above it and weaker below, with these support resistance levels bracketing it. So now we're at the upper end of the bracket. And you can see how, this has been working since end of December, going back to over here, and back to the 19th. So that's also an important level. We'll see if we can settle above that or not. This is where we get the early indication, so we're watching this closely. And we also trade that. Well, that's a 30-minute. Anything you want to add?
No, nothing. Just as you and I were talking this morning, that low looks pretty good for a counter trend, and looks like we're starting to get the counter trend. And now the
Yeah.
key is, where's it going to go to? Like, where's it going to, how far and how robust is it going to look?
Well, we have the dates. I mean, we have the levels, so we'll see what happens. This chart, I just wanted to look while we're here. Take a quick look. This is the weekly chart with the big circle and the square and the 144 level and the 108 weeks. 9, 10, 11, 12. So 112 weeks is we're related to the square 90, so it's still all in effect. But basis this one, we talked about this last week. This 58.10 is
Hmm.
really the key. This is the cash chart. So 58.10 is a level we want to watch. And if we take this out, then the market's going to be in for a bigger sort of a correction, I would say, at that point. So far here, it's very tamed, and seems a little innocent.
Hmm.
But our idea of we had an inside week last week. We talked about, hey, if the higher low gets taken out, we're going to trend in that direction. So we got that this week, and so that's that. So next week we have to see if that break to the downside is going to continue, or we're going to get into some kind of a triangle, or we're going to go straight up. So the key to all of this is watching these levels, so we know to move with the market and not try to get in front of the train for no reason.
Yeah, you don't want to
So,
do that.
well, yeah, it's not worth it. So, but yeah, you guys know the setups. We were looking at the line and the squares and all of these things. So everything's in place. We're just trying to work out the next few bars. And like, you're going to look at the monthlies this today. So it's good to get a perspective of where things are. Otherwise, it's easy to get caught in the day-to-day and the 30-minute,
Hmm.
and then forget what we're doing here, the bigger picture.
Hmm.
Right. All right, let's move on. You have anything to add to any of this? All the indices, or I know you're going to
No.
cover the NASDAQ, but
Yep.
other than that, okay.
No, it's good. It's good coverage.
All right. Bonds are kind of doing the same thing. We talked about it last couple of weeks. We took out the 45 line from the high. We called out that high. From there, we started trading lower, and then we squared out right there. Had a counter turn rally, and then once the 45 got taken out again, we're just really weak. So basically, longs were below, let's say 116 and a half. This 110, 111 is the next target. Okay. And depending on how we behave there, I'm really thinking at some point we're going to take out this low, at least do a false break, and that's
Hmm.
around 107, which would just about get us to 90, and that's 105.
Right.
So all those things can it's stacked in that way. So we'll just take one thing at a time, see how it goes.
And if it goes that low, why not go to par at the half square, right?
Well,
Hmm.
it's not,
A little lower, the lower half
yeah, it
square.
would, yeah. It's a trend, and bonds when they start trending, boy, it's hard to just call them out. It just keeps going
Hmm.
till it's all said and done. So anyway, whatever is said and done, we're going to have a really good year of trading. So that's what we have
Hmm.
to look forward to. Well, here's the weekly. And like you said, weekly par comes out right about in a half square
Hmm.
on the weekly square. So, that would be a very decent spot. Um, in the meantime, we're working this potential ABCD, and we're stuck at this 114 level. If we can take this out, this 107 is really the way. ABCD is at 108. I mean, it'd be hard for me to imagine getting to 108 and not checking this low. So, you know, that's what we're watching on the bonds weekly. Anything you want to add to that?
Weak being the operative word.
Yeah, the weekly.
Yes.
All right, so here's something we've been talking about.
Hey,
There's
somebody
a
woke
crude,
up, huh?
yeah, and just about when we were laughing about it last week, how nobody's talking, how it looks very squeezy,
Hmm.
put it that way, and not to fall asleep because that's exactly when these things start to move,
Yeah.
and how tight it got last week, right?
Yeah.
And sure enough, the lower trend line held. We were starting to make higher lows, and we talked about, it's really settling about 73.50 that will set us up for 79. And that's plenty of trading between, that's plenty of trading between 73 and 79. So that's what's left. That's our next step. And if we can clear 79.50, then it opens up the upper part of the square, which means we'll have to check out this high. And that's, when it got getting up into the 90s now. And that exact score would be 95. So that's what's possible, but one step at a time. If you're trading these, it's much easier. Now we made the move. Let's see how we settle above 73.50, and I think then we're good to go.
Yeah.
Yeah.
It's the key. Its key is getting out of this channel, and it's at the first part right now.
Yeah, first part, exactly. I mean, we tried here back in October,
Hmm.
right? But it,
Yep.
it really couldn't hold it. It was very volatile, and they just kind of
Gave
took
it
it
up.
out.
Hmm.
So, in a way, it was like a sort of a double head fake. Um,
Yeah.
okay, we're gonna go, we're not gonna go, came down, made a bunch of false breaks, and now we're starting to move higher,
Pressing
and the
again.
pattern and everything looks good. So yeah, let's see how that works out
Hmm.
moving forward. And you can even the weekly charts showing some activity. So we're clearly lifting off from the 60 level we'll be sitting on. And I keep saying, like, wow, we really didn't go down and try to flush everybody out. Maybe we just,
Mm-mm.
not that they have to, that would have been nice. So we know the levels. Let's watch this. We're looking for the counter trend and see how they look. Maybe it's a good time to visit this. This is our weekly
Look at that.
big circle chart.
Hmm.
I can't see, I haven't tried to reset this or anything. I just can't see how the circle is wrong, but maybe sometimes they get pushed out. But the important thing here is the trend line, the weekly trend lines, like, then on your charts at weekly, we break
Hmm.
these things and markets just run.
They're significant. Yep.
So we are approaching this weekly trend line. It's just a couple of points away. So let's see if we can break that or not. If we break it, next counter trend would be the one for the big train.
For sure.
Otherwise, you can see how well this 64.60 level held across the board. So that's a triangle we're working in the long run. So let's see. I don't think it's too late to, we talked about breaking the circle and getting back into it. It's rare, but we could get back into the circle. That would make quicken the pulse. So that's something that could be happening. So we'll see.
Interesting. Yep.
Mm-hmm. So that's for the weekly. Not much. It's fairly obvious. We've been hammering oil every week, even when it wasn't moving.
Hmm.
So now that is not much to add. It's okay. We expected that, and we were looking for that. So now it's happening. So you guys know what to do. Gold drew out a big triangle last week. We talked about the 50% level to be the level to hold above. To have at least to have some wind behind the sail. So 26.69 is that level. We tried to peak above it and it came back. So I think as long as we're above the inside of the triangle, it's I think it's going to be more messy than not. And like we said last week, we're going to let gold take a little breather, and we can come and visit it when it's ready, about to move or start to move.
And if you look at your, like the perfect example here, look at your weekly chart and you'll see it does this for a while and then explodes again.
Yeah, it's just we have to wait for the markets to be ready. And what else can we add here? Yeah, and the triangle is starting to be clear on the weekly also. And the
And look
reason
at
for the big pause is because the high did come in, you know, within in the area that we were looking for. Go ahead. What were you
it
gonna say?
squared out. Yeah. I mean, just look at the previous triangle that you had and then the move out of there. It's beautiful.
Mm-hmm. Big moves, big
And
moves.
and that was a high level consolidation after it made an all-time high, just like we're having a high level consolidation again after an
Mm-hmm,
all-time high.
mm-hmm, mm-hmm. And if you
So,
take the move from 23 after the
mhm.
correction, that's about 108 degrees. So gold is doing perfectly. All the moves are good. And 144 degree move for gold is a big deal. So it might take a little longer. And so we'll wait. Not a problem.
Yep.
I should probably do silver. I've been kind of putting it off.
Mhm.
Um, so silver, the deal is we also went up 270 degrees, found resistance, did a lower high and sold off. The point is, if you look at the space here, right above the 180 level, and you take the overrun up here, 270, we know we did a 90-degree correction in about 45 trading days. So let's see if that's actually there. So we did correct pretty well, as far as the numbers go. So the low, as far as I'm concerned, squared out. And so silver could be leading. Let's see what happens here. But long as, and we made a higher low. So silver looks actually pretty good. Long as the lows are holding, looks like we should at least get to 50% of the square and test it, around 32. It's at 30 now, and the 90-degree square is around 29 and a half. Okay.
Hmm.
So I thought the correction was very good.
Yep. Full square correction. That's
Yeah.
always clean.
Hmm. And yeah, so that's that. Let's take a look at copper. Copper is starting to get some life. I think the entire move after we completed the ABCD, holding the 60-degree level, which is that line, um, went up a quarter, came back. It's holding okay. I think it's looking good, but really we want it to hold fully above like we were trying to do here. And this could have been a little bit of a fake move, false move to the downside, but we'll see. We do have a big trend line, downtrend line. The key is to see how we break out of this. If we're going to squeeze to the downside or break to the upside. But in order to do that, we need to figure out which side of the 405 we're going to be on. It's 408 as of now.
Hmm.
So kind of watching that to see what get moving. But now it's sort of exactly in the middle. So
It's funny, that you're in Southern California now, and when you
mhm.
said the 405, all I could think of was the freeway out there.
Freeway. Yeah.
Stuck on the 405.
Yeah, basically, yeah, that's what's happening. And yeah, the 405 hasn't changed much after all
No,
these years.
no.
All right. So looking at the weekly, we're, we talked about this last week. We're holding below the 144, which it's probably not the best place, but it's okay to consolidate there. And the main trend line is the lower one. We're well above that. That's okay. Like I said, I think based on the daily, you can see how there's a whole consolidation thing happening here. So let it finish up and see.
Hmm.
But I'm not really geared up for one way or the other till we clear the square on the daily.
Hmm.
So then,
Agreed. Agreed.
yep, let's wait and see. And let's move on to the dollar. We talked about holding above the 60. We were holding above 60 last week, and I said, hey, that's just a sign of strength. We should just move higher. And so we did. I don't know what else to add to that, Ben. What can you say?
Well, look how that beautiful back test on the 60, man. That's perfect, right? And then you get above it and then you test it and then you go.
Then you go. So it's all technically good. Dollar's very strong. I talked about long as it's about 107 and a quarter. You could even come back into the fold and still be okay. So dollar's in a great position about 107 and a quarter. And I think
Mhm.
there's more to go, even though it might be hard to believe as we
Yeah.
get going here. So 112 is really the level, the target now. Once we cross the 50% level, we talk about how the upper square opens up. And you can see how, if you guys follow this every week, you can see how slowly, from the time we called out the low here, the dollars have been, just moving perfectly. It had a nice pullback. And now we're, really above. And I would say long as we're above this 108, which is 2/3 of the square, dollar's in a really strong position. And
Heading to
and
112, basically,
heading
right?
to 112 at some point, not like we wouldn't have a couple of corrections, but it's poised, right? In a
Hmm.
good place. Got everybody with that false break, with the square, with the triangle. So everything's lined up and pretty much like how we've been discussing it. And let's move on to the euro.
Good. But very harmonic. I mean, it's doing what it's supposed to do once it fails at certain spots.
Absolutely. So last week we talked about this 90-degree square and how euro's basically weak below it, and that
Hmm.
39.36. And I think I specifically talked about how, it just looks wobbly. And if we take out these lows, it's going to go. And it looks like that's what happened. And with the inside bar today, let's see how it all starts up Monday or Sunday. But basically below 39.36, euro is in pretty weak condition.
Yeah,
And the trend is down. Not sure
no
what else to
question.
say, other than where could we, that of course that opens up the downside. So you're talking about par. There's 99.543 looks like the 135-degree level.
Boy, that timing in October sure worked perfectly. That half square timing.
Yeah, that worked out perfectly. Everything so far has been pretty good because we were going off of this low earlier,
Hmm.
and
Hmm.
that when timing came off in there. So the euro, dollar, all of the timings all coming in. Here's the weekly. We talked about this, how the 50% of the level just quite, remember, see last week how we closed right on the right on the
Right
50%.
on it. Yeah.
And we talked about how, and of course we had to fake it to the upside a little bit before we took it down, but basically took out the lows and swish. So based on this, uh, we just have more to go. I don't know how else to put that.
Hmm.
Um, and you guys saw the level on the daily, on the weekly is 41.96. So that's the story. Let's see. Well, when these things are trading and they're weak and sort of slipping through all the key levels, and of course the flip side, when it's taking out levels like the dollar's doing, trading's very easy. It just gets, the hard part of trading is when we get stuck in ranges and trying to anticipating and waiting for the break. and
Exactly.
we do that a lot of that using levels. So anyway, that's the euro. Let's check into the Hang Seng,
Hmm.
which I guess they're all on vacation because nothing really happened this week. What we are doing is, like we talked about, we had this bracket between 19,450 and 2380, that bracket, and we've been, in that for the last month or so. So long as we're above 19,450, which, a little below that, we have 19,250. Above that range, it's firm. It's on firm ground. It's not really weak, and could easily uh, take out 380. And once we take that out, then we should be in good trending mode with the strong Hang Seng. But for now, it's still sort of consolidating. Downside would be if we take out this 19,232, this area to the downside. So we're well above that. So, but that's a balance point for now. You're going to look at monthly natural gas today. That should be
Yep.
amazing.
We'll take a
Yeah.
look at it.
Hmm. And natural gas is trading pretty much by the book. Went to the upper band, knocked around a little bit. Now we're correcting, but you can see the trend has changed, let's say,
Hmm.
finally, right?
Hmm.
Because at least on these charts, we were looking at this quarter level to be cleared, which we did that in November, came
Hmm.
back to recheck it. And now went to the upper end of it. And so long as we're consolidating above 3, I think it's in pretty good shape,
Yeah.
whatever that's worth.
Hmm.
All right. I know you have a lot to cover. So starting with the NASDAQ, Bitcoin dailies, and all the other commodities monthly. So
Right.
let's get on that. Let me put it back to you.
Interesting week, wasn't it? Even though it was a quiet holiday.
Yeah, really. I think it set up a lot of things
Yeah. A lot of setups. Yep.
quietly.
Hmm.
Well, here we go. You
Hmm.
do have a lower low, though, unlike a couple of these other markets.
Yeah. Unlike the ES, we do have a
Mm-hmm.
lower low here. Yesterday we made a slightly lower low. It looks like a false break. So this is starting the
Mm-hmm.
correction back.
Mm-hmm.
The key level right now is this 21,366. You can see for the last 4 days we've straddled it, right? We've been both up and above and below it. Looks like we're going to get a close today above it. And then we
Mm-hmm.
want to see, do we sit on top and then we can move up and potentially try and attack this, 22,000 level of the half square. We definitely have a correction, right? Because we have a high, a low, lower
Lower
high,
high,
lower
lower
low.
low. Mm-hmm.
So it's filling out now, and now we have to sort of see what are we going to look like? Are we going to go sideways and get stuck below this half square, but above this full square? Then we could chop around,
Mm-hmm.
or do we go up, tap it, and then get stuck below this 21,366? That would
Mm-hmm.
be a big marker for me. If we get stuck below that after coming up and making a lower high, then that would mean, I think a more violent down move is starting.
Mm-hmm.
Anything you want to add here on the daily?
No, it's perfectly in line. Good.
Okay, let's
You have all
let's
the
go. Let's
levels.
go look at the weekly. So weekly, you can see we had an inside bar. We took out the low of the inside bar, last week's bar, and then we made a slightly lower low today. But the key thing is we stayed on top of this,
Mm-hmm.
right? We found support at this half square. So weekly basis, 21,082 is key. We get below that, then we start rolling downhill towards 18,000. So this weekly basis, this 21,000 is really key. We've gone over the timing, lots of timing in there. This is an interesting one. 60 weeks from the
Mm-hmm.
uh, October 23 low, which is a good number. 247 from the COVID lows to the high, which is also a good number. So the timing was there. You can see it in the chart. We have the timing. Now we just got to see when we lose this 21,082 weekly basis, that will be signal that the next phase of the decline is going. And now let's go check the monthly.
Yep.
I set the monthly to the O2 low,
Mm-hmm.
and really, really nice square here. We have 270 in time by if we use the half square here,
Hmm.
you got 180. Monthly basis though, the level we want to watch is the 21,100.
Hmm.
Get stuck under there, and then this all, is sort of bag holders then on a monthly basis. The levels to watch, if and when we do get stuck under the 21, 18.2 will be the next level of support, sort of where we were in the early part of 24, latter part of 23, testing this area. And then if we lose that, then it's 15,000. Anything you want to add on the NQs before we go to the calendar chart?
Well, I think that, in a monthly, the higher time frames, the timelines are very important. So we have a 270 there. Is that right? Yep.
Yep.
And that's important. Plus the 157 to the upside. Yeah. I mean, we are squaring, and let's watch that 21 to 1121. Right? That's the key level here.
That is the key level monthly basis. You're right. That's
Hmm.
157, not
Hmm.
180. My mistake.
Hmm.
157.
But got
Let's look.
very close to hitting the low of the high bar. So let's see what happens. We have a
Yeah.
whole month left. So.
Yeah. We do have a whole month left. A lot of price action yet to go under that January bar. There's your calendar day.
Mhm.
Now the calendar day was interesting because I know in ES you were looking to see if you could get above the 360 or at least get to the 360. Here we popped above it with the contract change. And then this is the key one. Look at that test. That was a perfect test from below.
Yeah,
And
yeah.
we got stuck under that 22,060 level.
That counter trend came in really nicely, right? In a
Hmm.
number of markets. So.
Yeah. And along this one by one too, which was
Hmm.
nice.
Hmm.
So let's see, you know, if this counter trend gets stuck below this one by one, primarily we're looking to get stuck below the 22,000 again. But if we get stuck below the one by one, that'll be a really strong sign that there's more to come to the downside. So we'll be watching this calendar day chart closely to see how that plays out. All right, let's jump over to Bitcoin. Bitcoin's having a nice little rally. We came down, took out all these lows, which was a false break, classic move, right? Higher low than this one, but took out all these lows here. And
Hmm.
then we've had a nice move upwards, and we recaptured the full square at 96,000,
Hmm.
96.6. So is a trip back to 102 likely? As long as we're above this 96.6, yes. If we get stuck below it, then it's back to dealing with, the 91,000 area below.
Hmm.
And you'll see why that's important as we go to the weekly and the monthly. Here's your weekly, perfect square out there. Very nice square at the high. Got a reaction off of it, and now we're pushing back up. So on a weekly basis, we got a wide berth, right? We got 108 and basically 89.5. And right
Hmm.
now we're about dead smack in the middle of it. So no real edge weekly basis. We want to see where this counter trend goes. Based on this square, we'd like to see, a lower high and then a rollover, and then we know we'd at least do an ABCD down or maybe something bigger.
Hmm.
Now, if we hold the lows and can push up through 108, then next leg up has started. So we'll
Yep.
be watching that.
Hmm.
Here's your monthly. Now you see why this area around 93, 92,000 is so important. Monthly basis, this was the big bar move up. Then we had the high bar and the strong pullback. And both of them, the monthly close in December was well above 93. And so far in January, the low has been again on top of the 93.
Hmm.
So 93 is holding. So we gotta watch that. Again, from a big cycle standpoint, monthly basis, we've done 90 months low to high from April, May of 2014 into the highs into November, December.
Which has a certain meaning attached to it.
It's fairly large.
Hmm.
You don't get 90-month moves or 90-month cycles very often. So does it mean it's got to go down from here right away? No. It just means that that's a significant time point. We have to watch and see if the technicals support it. It could be a significant high.
Mhm.
But until we take out 93 monthly basis, it's bullish. Right? Remember we talked about this. We could come all the way down to this 74.5 and still be super bullish
Mm.
because then it would be just sitting on top of this 8-month triangle, consolidation that we did, the wedge. It's just trying to figure out, where's the next move, right? Is it back up to what? Is it up to 112 or is it going to be down to 75? And this 93 is the dividing zone. Above it, odds favorable going up to 112. Below it, back to 75. Anything to add on Bitcoin?
No, we're good. We're good. We know
All
all
right,
the
let's
levels and
yeah.
cycles very
Periodically,
clear. Hmm.
periodically on this podcast, what we'll do is we'll just spend a show looking at the monthlies, and it
Hmm.
gives you monthlies give you a sort of a big picture, telescopic view of where we are, and it's helpful because it gives you perspective. Like
Hmm.
one of the things Barry and I always talk about is the questions we ask is where are we and how did we get here?
Hmm.
The monthlies and weeklies help you with the how did we get here, right? Like
Yeah.
what was the path to getting here, the big picture path, not
Hmm.
like 3-minute bars or something like that. So
Hmm.
keeping this is the reason why we do this and why we go through this exercise. So let's get started. Let's start with bonds, the
Hmm.
30 year. Barry, what does this look like to you? This whole little formation we've been doing here for almost a year and a half.
Well, the trend is down, and yeah, what fourth wave-ish? What are you thinking?
Exactly. It's
Hmm.
just a sideways move,
Hmm.
frustrating everybody. Big moves up, big moves down, going
Hmm.
nowhere
Hmm.
before the next leg of the primary trend, which is down, kicks in.
Yeah, yeah.
It looks to me like, we're starting the next leg down in bonds when you step back and look at, the big picture monthly view on the 30
And
year.
look at that 90 month count.
Yeah, if we're looking 90 months high to low, right? Because we did a high to high at 90, we did a
Hmm.
360 into the high.
Hmm.
If we just say if 90 months, this takes us into 2027, September of 27.
Hmm. That could be just about right. Let's see.
Yeah. I mean, the length of these legs 40 does
Oh,
45
absolutely.
degrees a lot of times, and that would be about another 45.
Hmm.
So that's the big picture in bonds looks down. You can see it structurally. I mean, look where the rebound highs came, right?
Hmm.
The high came right at this low with these lows at these highs, and we failed.
Mm.
Try to push again, couldn't even get up there, and now we're heading down. So the next big level, as Barry showed you, monthly basis is going to be very similar to what he was showing on the daily and the weekly is around 109.24, and if we get down here and take that out, then we're heading to lower lows.
Mm.
So big picture bonds look bearish. Anything else to add on bonds?
Well, I think you said the key word there, bearish. So,
Yeah. All right, let's jump into the grains.
mhm,
First, we start off with wheat.
mhm,
And when I do the review for these monthlies, I kind of get a flavor for what each group looks like it's doing. And
mhm,
the grains, the note that I had to myself was, bottoming and closer to the bottom than some other groups.
mhm,
This thing has been coming down since the highs of the Russia invasion of Ukraine. The key level here for me on wheat weekly basis is this 595. If we can get and push above that and to close above that, then we're sitting on top of this whole structure that launched it, into those highs. Like
mhm,
remember, see, we got below here, tested it, couldn't get above, tested it, couldn't get above, couldn't even get there, tested again, got through, sat on top, launched. So this is the key level.
mhm,
Monthly basis, we've been banging around in here since what May of 23. It'll be 2 years in May.
Right.
So this is a key level. It is a battleground. You can see we did like kind of three drives here. We had a little bit of higher low. Now we're seeing some more weakness. Do we come down, flush all this out, and then go? Maybe. Maybe we come down and test this trend line. I just think we really will see the big push come from a higher time frame when we get that close over that 595. So that to me, monthly basis, that's the key. This has more
Hmm.
work to do, but
Hmm.
you can see it's rounding. The
Yes.
momentum it had coming down has kind of waned. It's flattened out now.
It's
So we'll
buffered a little
watch.
bit. Hmm.
Yeah, we'll watch the levels and on the shorter time frames and see if we can't, you know, pick it up before the monthlies because the monthlies will be the last to show that. But we'll watch it and see.
Yeah.
Anything you want to add here on wheat?
Well, we're good.
Okay, let's uh let's move over to corn. Here's corn. Now this one, corn has been leading, right? It was leading on the way down. It was
Mm.
really weak on the way down, and now it's pushing up. Here's your key price point for corn is this 462, 463 area. We can get up on top of that and sit on top of that. That's big. Because remember,
Hmm.
this is where we failed. This was the lows here. This was the breakout going to the highs. This was a high where it failed. And then it was stuck below here for, 6, 7 years in a consolidation.
Right.
So this 463, call it, is key. Once we sit on top of that, we broke the downtrend line, which is good. That's a first step.
Hmm.
Now we need to sit on top of this 463, and that'll open up, the half square, which is 608.
Right.
From a cycles timing standpoint, if we do a 90 low to the sort of third drive high, we've got one, two. See if we can get a third drive here. Puts us into late 27, early 28. And that's what corn looks like. Any other points to make here on corn?
Well, let's see what the correction looks like. I mean, we should hold at the quarter or the three-quarter of the square level, no matter what kind of a downtrend we get, correction we get. So as
Let's
long
see.
as we're above that, I think corn's in good shape.
Mm-hmm. Let's go to beans. Isn't it interesting where beans is trying to bottom here?
Yeah.
Right on a full square. See,
Hmm.
this was the long consolidation that it made, prior to that move, and it's trying to hold right in that area.
Hmm.
So
No, no,
here,
looks good
obviously,
on the trend
983,
line.
yeah, 983 is key level. If we get stuck below that, then we're probably going to have to do some sort of false break or take out these lows before we go. If
Hmm.
we can hold on top of it, then we'll get a move eventually that breaks the downtrend line, and the pressure will be to the upside to the half square of 1275. Cycle wise, I just looked and said, okay, if we do 45 like this, low to high, we do 45 low to high here, puts us into early 2028.
Hmm.
That would be a nice 45-month run. So we'll see if beans can do it. 983 monthly basis is the key here. Key thing to watch. Anything to add here on beans?
No, that 983 is the level to watch, and the rest is really that support from the 2019, 2020, that level right there. Yeah.
Right in here,
Gotta
yeah.
watch that. Yeah.
Yeah, it's all within that, like in that plus or minus a little bit in 983, that full square.
Hmm. Hmm.
So that's what we got to watch. All right, let's move over to softs. And the theme with softs, interestingly enough, is they look weak.
Mm.
Uh, sugar and cotton have been sugar's bit was strong and now it's weak. Cotton has just been sideways and it's starting to weaken up. Cocoa, we talked about cocoa on last week's show. It looks like it made a spike high and it's going to start heading down. And coffee is, at or near the high, but not looking so strong. So let's take a look at the monthlies here and see what they tell us.
Hmm.
Let's start with sugar. So here was a nice run from sugar, essentially a 45-month run, low to high. and it made a good move. And you can see sugar likes 45s and 90s, does them all over the place. The issue is we recently had a nice move up, and now we've turned pretty hard down after this strong
Mm-hmm.
monthly up bar. So 2240 to me is the key level, and here's why. Look at what's happened at that level in the past.
Yeah.
Like it rejected we made the spike high in 2010, 2011, and it was basically launching off this 2240 level.
Mm-hmm.
Once we got below it, it had a lot of trouble. And here we got back above it, even tested it, and then we came down, tested a few times, and it looks like we're failing now.
Mm-hmm.
So this thing may be having to come back down, maybe take out these lows here from 21, 22, do some sort of false break, and then we can get going again. But
Mm-hmm.
until we're above 2240, it's looking a little weak. 45, if we because this thing loves 45s. If this low holds, high to low puts us into 2028.
Mm-hmm.
But let's see. I'm really concerned about how we went up here and failed. Big picture, because you could see what happened here when we failed the last time.
Mm-hmm. Mm-hmm.
It's pretty deep sell off.
Yeah.
So 1784 is going to be a very big tell. Do we hold it? Do we test it? Do we make a higher low than here, or do we get stuck below and then have to come back down in here?
Mm.
So we have to watch and see. What do you think about sugar?
Sugar. Well, there's at least a potential ABCD correction coming. I mean, that would really reset the trend and start a new one.
Mm,
Other than that, long as we're holding that 1784, we could consolidate and move higher. So,
correct.
yeah. I mean, the
So
best
let's
part of
see.
the trades were, going up into starting in 2020, like we were trading that, and then correction
Yeah,
up into 23, right?
yeah.
So
So
now
now
it's
it's
taking a breather. Yeah.
yeah, it's a watch and see. Let it rebuild.
Mm.
Let's go to cotton. Cotton, the thing that likes to do triangles, man. Look at the triangles everywhere here. So the reason I'm saying cotton looks a little weaker, even though it's been sideways, as you can see, we were forming this nice triangle, and we
Hmm.
broke just at the end of December. We broke out of it, and now here's the January bar, and it's completely out of it so far. So until we can get back, at least above that apex of that triangle,
Hmm.
this looks like it may have to go down and test this 58.85. Because I mean, look where this triangle was forming. It was under this, right? All this here. We've seen that happen in a lot of commodities like gold and silver, where it sort of did a consolidation on top of a high. Here, it was doing a consolidation below these lows from 22, 23, and early 24.
Hmm.
So yeah, there may be some more. I mean, right now, if you put a gun to my head and said, "Would you long it or short it?" I'd short it
Hmm.
based off this.
Hmm.
I don't want to short it because we've been going sideways for so long. I mean, look how many months we've been going sideways.
Yeah.
I'd rather see it play out and have a better setup. But this is a bit troubling.
Yeah. Yeah. Couldn't hold above it. And then,
No, nope. So we got to watch. If we get the weakness and we get down to this 58.85 and we hold, then we can look for a nice long setup, because you can see there's
hmm.
been value here before.
Hmm.
This area has seen a lot of activity. So maybe it just needs to come back to that home sweet home before it gets going again.
Hmm. Right.
But we'll watch and see.
Hmm.
We'll watch it. Let's go to cocoa. Crazy cocoa.
Hmm.
So we laid out the thesis and showed all the relationships last week, so I won't go into all those. Bigger picture, we squared out here. We did a false break here. Now we're coming back up to test these old highs. If we turn down here and get back below 10.5, then we could really get going to the downside.
Hmm.
If it can't push up and make a higher high, off of this thing, especially if it stays stuck below 11,700. This is going to invite sellers to come in. Uh, Again, it can come all the way back to here and still be bullish, but do you want to ride it back down to 3,600 if you're long? No.
No.
So we're bigger picture, it's caution. Bigger picture, it's if you're aggressive, it's looking for short setups.
Mhm.
It's definitely not looking to long it bigger picture. Also, uh, the thing that sets off alarms for you, Barry, we did 90 months low to high
Right.
from 17, and we did
288 from,
288 from 01.
and it was a nice ride coming off that 50%. So,
Yeah.
the break in 23. So
Mhm. It was a big move, right?
huge
What
move.
did you do? One, two, three, four squares,
Hmm.
4.5 squares.
Yeah. At least we got to wait for the next correction because here we have, we're not quite, we got the high in place, came in, monthlies came in, so we have to see. We need some more data.
Yeah. And again, if it sets up, it's a better short in my book right now if we get a proper setup.
Yep.
All right, let's go to coffee. Here's another one, not quite as egregious as cocoa, but it's possible we've got a high in place.
Mhm.
If not, maybe one more push. And the reason being is when you look at where we pushed and where we are now, it's trying to tell us if this is going to be a false break or not, right?
Hmm. Hmm.
Because we are testing the highs from 2011, we are testing the highs from 96, 97. And if we lose it, right, if we come back into this 283, or more importantly, if we get stuck below the full square here at 283, this becomes a false break.
Mm.
If we pull back and we hold this area, right, we just consolidate here, or we stay on top of 283, then there's another leg to go.
Hmm.
But on the lower time frames, let me look at my notes from last week. I'm pretty sure we had some pretty decent squares come in. Yeah, on a weekly, we were 252 by 252 at
Okay.
that high.
Hmm.
So something ended there. We don't have enough information yet to know if, okay, this whole up move ended, or is this just this leg ended and we're going to do some sort of consolidation and go again. 283 is going to be your number. As long as we're above that, we should be in very good shape for another leg higher. If we do get stuck below, this did square out. This was a false break, and you got to look for lower prices.
Hmm.
Let's put it this way. It's not the same setup as it was here in this triangle. And this is what we're looking for, right? We're looking for the moves where, risk reward is in your favor. Here, not so much. Anything to add on coffee?
No, we're good. Good
All
coverage.
right. Let's go to the metals. The metals are correcting in sideways. Barry did a good job of covering the gold. We'll touch on the weekly, on the monthly, just to get a flavor for where they are there. There's gold. Key thing here is 260, 2667, 2667
Hmm.
monthly basis. And you can see where we're kind of been pinned for the last 3 months. The interesting thing is if we can't get above that, this circle might start exerting some pressure and cause a little more of a correction.
Hmm.
Knowing gold, you can see what it did here before it broke out. It just formed a little bit of a triangle. Here we're forming a triangle again. So we're probably going to triangulate right around here, frustrate everybody, and then break and run again. All right, let's go to silver. Silver, everyone's been worried about silver and doing a bunch of hand wringing. Look at where all this price action is.
Yeah.
It's on top of all the previous highs here and this whole move from 2020 basically to
Hmm.
early 24. So it's not a problem. It's correcting. Is it frustrating if you're expecting it to do this? Yes, but it's pretty healthy. long as we're above 2666, which you can see why is very important. As long as we're above that, the next target's up near 38. If we do 90 low to high like we did here, you're talking about late 2020, September of 2027 for a potential bull market high. So silver looks good. Let's go to copper.
Mm-hmm.
Kind of looks as messy as it did on the daily and weekly, doesn't it?
Yeah, and it's still holding below that 50%. So,
Yeah,
but
it's below
your trend line looks good. It's
the trend line's good. It's
mhm,
really after this initial push down, it's just kind of been sideways, rocking back and forth sideways,
mhm.
which is okay. I mean, the key thing we want to get above the half square here. That's about looks like 428, 427, 428. If we can get above that, it'll take the pressure off. Otherwise, we may come down and actually come right back to this apex of that triangle. That would not be bullish. That would really really call into question whether this wasn't a major top with a false break to boot.
Mhm.
So we'll have to see. But watch this half square, 427. That's going to be key for that one. Let's go to the crude energy markets. Look at crude.
Wow,
The,
look at that.
the interesting development on crude here. Remember we were talking about how I showed this chart a bunch of times and say, hey, we're kind of rotating down along the circle. The concern I
Mhm.
have is these monthly closes below this 71.59 full square. Well, look at the start
Mhm.
of this month.
Yeah, well, ready to
That's your
go.
low.
Yeah,
Right.
yeah,
That's your
yeah.
low.
Mhm.
So 71.59 monthly basis is key. Stay above that. We could break out of the circle and really get a good rip. We did 120 uh, from here to here, low to high. If we do
Mhm.
120 from this low to high,
Oh
bull
boy.
market highs in 3030. So that's potentially out there. And last but not least, let's go to our good friend, Nat Gas.
Yay, broke
This,
out.
yeah, it broke out. I mean, that's the main thing. Monthly
Mhm.
basis, we broke out. Yeah, we're having a pullback, but look, it's an inside bar so far.
Mhm.
Um, there's nothing wrong with this. If we pull back to, 282, 283 to recheck that, it's okay. These triangles may take a while, but they lead to big moves in this type of commodity.
Mhm.
I mean, like this one here, right? We had one here. See, it broke out, came back a little bit, 3 or 4 months pullback, and then gone. So the bigger picture, it's bullish. Bull market here. If we did 90, like here, 90 low to high, late 27, September 27.
Mhm.
Next number monthly basis that's key is going to be this 488. And that's it for the trip around the monthlies. Like I said, we try to do this every so often. Um, it's the first show of the year, and we'll always try to do the monthlies to give you the big picture view. But this year and this month should be crazy. So be ready and rest up this weekend for the real start to the year trading year, which is next Monday. Good job, Barry. We'll talk to everybody next week.
Good job, Ben. We'll talk next week. Everybody, have a good weekend. Rest up, and we'll be ready to go.
Talk to you on Monday.
All right, take care. Bye
Bye.
bye. Ciao.